Hello everyone, my name is Christian Gomez and I'd like to welcome you to my Teenage Day Trader channel. And so today I'm going to be talking about how I make money trading stocks as a teenager and how you can eventually too. But before we start, I want to go ahead and say out the disclaimer out loud. I'll have it in the description. So in no way am I recommending you or obligating you to do anything that I talk about in this video. I am simply sharing the indicators, mistakes, and lessons that I have used and learned to make me a profitable trader. With that said, let's jump into the video, and please leave any questions or concerns and comments in the comment section for me to answer later. Thank you, and I hope you enjoy this video. Okay guys, so now to the actual video. So the platform that I'm using here to look at the charts, this is strictly what I use to look at charts. To do all my day trades, I use SureTrader. So I will do another video explaining like what brokers would be best depending on your situation, you know, how much money you have, how much money you're willing to risk, and all those things. So I'll make another video for that, and then I'll make another video explaining exactly what this platform is. This is Thinkorswim trading platform developed by TD Ameritrade. And so I use this simply for charting. And so why do I use it for charting? Well, it's a free platform, so it saves me a lot on fees there, right? And so when trading, you want to get rid of as many fees as you can to eliminate unnecessary fees. So all you have to do to get access to this platform is create an account with TD Ameritrade. It's completely free. You don't even have to fund it. But just so that you have access to this Thinkorswim platform, you can download it for free on their website. So I'll be making another video describing how to use this platform, you know, what I use it for, a little bit more into detail. But now that we have it, so right when you open up the platform, it's going to show you all this stuff. Again, I just use this for charting, so there's just $3 in here for day trades. But yeah, it gives you a live news feed. So let's say I type in a company like Apple. So Apple, their ticker is AAPL. The ticker symbol is just like the abbreviation of the company that's logged into a stock exchange. You'll need to know that. I'm going to make another video describing like all the terminology that you should know in every single video, just so that you're educated in that too. So it just tells you all the news and the time and all that stuff. So let's go ahead and jump into the stocks that we're going to be talking about today. And these two I chose, they're called inverse ETFs. So they're two gold stocks. An ETF is an exchange traded fund. Again, that'll be in the terminology video coming up soon. But so they're inverse ETFs, and then what that means is that, let's say, you see how this one is going up, JNUG is going up from here to here, then the other one would be going down, right? So this is on an uptrend, the other one would be sort of like going down from here to here. From this point to this point, it would be going down. So it would be doing the exact opposite of what JNUG is doing. And that's basically just what an inverse ETF is. So for example, that is in right before 2017 ends. So let's go ahead and check at its inverse ETF. Again, you can look at what the inverses are just on Google. If you type in any stock that's an ETF, it'll tell you its inverse. Just type in the stock and then inverse. So now let's go ahead and look at its inverse. The inverse for JNUG is JDST. So right before the year, like as I was saying, it had that big rise, and as that was having that big rise, JDST was falling right before the year. So there's a correlation there. Let's go ahead and jump back to JNUG. This is the 1 year chart. When I'm day trading, I use a 1 minute time frame. You see how there's all these different time frames? Typically when you're day trading, you want to be in that moment. You want to be seeing exactly what's happening at that moment. So I use 1 minute. And what this means is that every single candle, so every single little block of these represents 1 minute. So market opens at 6:30 a.m. Pacific time. That would be 9:30 a.m. Eastern time. And so, for example, right here, after this shaded gray area is when the market opens. The shaded gray area, that's representing pre-market and when the market is closed. And then when the market opens right here at 6:30, if you can see toward the bottom of the screen, it says 6:30. As you drag it along, it's giving you every single minute that the market is moving. And with that, you have price increases and fluctuations. So let's go ahead and take this back. I'll pop this back to the 1 minute. So the way that you use this is you just hold down on your mouse and you drag it to whatever point you want to stop at. I want to look at the whole, basically what the whole day today was. So I'm going to drag like from a little bit before the shaded gray area ends, which was around 5 a.m. this morning, 5:30 a.m., all the way until about 1:20 p.m. today. So I have like the whole market open in front of me. And so now let's explain a little bit of what these lines mean, the studies that I inputted. So this red, pink, sort of pink, purplish, and gold line, those are called, as a whole, they're called VWAP, right? So this is the upper VWAP, this red one. The purple one is the middle VWAP, and then the gold one is the lower VWAP. If you click on, you go up here and you click on studies, edit studies, it shows you all my studies that I have. So in the price range, it's VWAP that's up there. And if you guys want to copy this so that when you do download this platform, you have every single thing, just go ahead and take a screenshot or whatever. So you have the VWAP up there, the exponential moving average, which is this blue line right here that I'm pointing to. It's increasing right there. That's the exponential moving average. And then the MACD is this section right here where it says MACD. And then this lower section is called the RSI. So if you look here, RSI, and it tells you right there, RSI. More into how you can trade inverse ETFs and how I trade them. Right, so actually I'm going to go ahead and split it to about halfway into the market, just so that it's a little bit easier to see. So market opens, I typically wait about 15-20 minutes just so the market can sort of settle, because in the first 30 minutes is when all the hype is going on. Most traders are trading, most day traders are trading here, right? So you see this huge drop, right? So I'm just waiting for the market to settle a little bit, get more of an idea of where the price is heading. And so if you see here, once the price is sort of touching this yellow or the gold VWAP down here, the lower one, a few minutes go by and the price instantly shoots up again, right? And so once it reaches this middle one, it sort of consolidates a little bit, stays around there, starts to flatline a little bit. And it's crucial to watch for the flat lines, because flat lines almost always signal some type of reversal, whether it's up or down. Right here you see that when it's flatlining, it goes immediately up. So this, you could say, is a sort of like support. This is like the average right here, and then this is like the resistance. So once it hits the resistance, this top red VWAP line, the price, typically there's not much demand there. So since there's not much demand, by the law of supply and demand, the price is consistently falling down. So we see it fall down a little bit more here, starts to flatline there. We see a slight trend reversal, tries to test to hit this resistance again here, the top VWAP, and then it gets rejected and then comes all the way down. It settles around the average again, and then it flatlines, and then we see a reversal. So VWAP is very crucial for determining what type of entry points you want, right? And to give you an idea of where to get in and where to get out. So ideally, you want to get in around the yellow VWAP, because this study is telling us that if you get in here, then you have the highest potential of making a profit, right? Or even if you get below, if you get in below, whatever, it doesn't matter. Whereas if you get in here, you don't have much of a profit potential of getting up there, right? And you have a greater chance of, a greater risk potential, because you have to fill this gap up there. Whereas here, you can just cut your losses. If you are losing, you can cut your losses very minimally, right? Your losses, if we look at here, around 14.18, right? When I see that it's turning around, it's starting to get out of this yellow VWAP, so I mean, I have a greater profit potential, and I set my stop loss, like I'm going to cut losses here, at 14.13, right? So my potential for loss, if we look at what it says there, is negative 0.3%, around there. Whereas if I sell on the resistance up here, my potential to win here is about 1.5, a little bit more, 1.5%. So 1.5 to 0.3, that's about a 5 times difference, right? And so you really want to keep your profit to loss ratio around 3 times, so that whatever your potential to win is a lot more than your potential to lose, right? So that's a simple thing to follow, just so that you stay consistent and so that you're not losing as much money, so that you're able to make up for whatever you lose with your profits. And so that is the VWAP itself. Okay, so now we're going to go ahead and talk about the EMA. So what the EMA is, it's the exponential moving average of the stock price. And so every single second, the EMA is this highlighted blue line that I'm going over right now. And so ultimately what that does is it tracks the movement of the stock price, right, based on when the market opened, or just the whole price as a whole, right? Because we can see that even like when the market is closed, it's giving us the EMA. So what this does is it's giving us the stock price average, and this is being calculated every single second. So as this drops, this EMA is dropping too with it, right? And so ultimately it's giving us like the average of the price consistently. So every single second it's giving us the average. The way that this would help us as day traders, let me go ahead and just click on this segment. Let's say this begins to, this price has hit its low, it's hit its support right here in the bottom. And we see it trending back up a little bit, right? It goes from 14.1, from low 14.1, and then it starts trending up about 10 cents to 14.2. And so we say, okay, well, it had this huge jump in 1 minute. What can I do to assure that it's going to keep going higher? The price is going. So what I look out for is I look for at least 2 candles above the EMA to sort of confirm that the price will keep rising, right? And it doesn't always happen, but I'd say around 99% of the time it does happen. So right here we have these 2 green candles, and then it sort of settles around here for a minute. This gray one, by the way, when it's gray, means that the price stayed around the same, right? So I mean, it only moved about 1 cent in that whole minute. And so we see these 2, and then it starts climbing. And then it goes a little bit above the middle VWAP, starts to settle down, has this huge red candle down, right? We see that it tries to test again after it touches this bottom. It tries to test above the EMA again, but there's only 1 candle here, right? So I'm waiting for that second candle to be green for another minute, and then for the third one to be green again, right? So on the third one is when I would jump in, but it only held up 1 minute, 1 candle here, and then it went red. It stayed red for that minute. And so again, we see this 2 candles above the 2 green candles above the EMA being the blue line. So we have 1 minute here, it's green, and then the next minute it's a little bit more green. So then I would get in around here, right? Around 14.24. So if I get in at 14.24, and then after that confirmation, then it just keeps going up, and until we hit about 14.4, right? And so that's mainly what I use the EMA for when I do use it. Again, this is like my main trading setup. So when I'm day trading, these are the exact indicators that I'm using. So that's my philosophy behind using the EMA. I wait for those 2 green candles, and then just wait for it to settle a little bit, and then wait for that confirmation, right? So those 2 green candles above the EMA, those are my main confirmations that the price will most likely trend higher. Again, don't rely on one sole indicator. Take all of them into consideration, and then from there you can make your thesis as to where the price will continue to rise or if it'll drop. So that's the EMA. Just look out for those 2 green candles above it. And now let's go ahead and talk about the MACD. And before we do talk about that, I'm going to go ahead and let's take this back. I'm going to just like sort of reset it to that. So let's go ahead and do today's market about halfway, so that we get a larger scope of what we're looking at. So MACD is around here, right? Let me explain now. So I'm going to go to the studies, And you see how it's just, it's the lines and then a few green bars, a few red bars, and the price is decreasing and whatnot. So I'm going to go ahead and click on Edit Studies. I'm going to just go over with my mouse on the MACD, and I'm going to go to this little tool, right? It's like the setting bar. I'm going to click on that, and it says Show Breakout Signals. By default, the platform has it as no. I'm going to go ahead and set it as yes, and then you'll see what I mean when that happens. So I'm going to click OK. I'm going to apply that difference. Okay. And now, whenever it spots like a OK entry, right? This isn't always spot on. Like right here, there's a green one. There's like a green buy signal, and then right away it just turned red again. So the MACD is more of like kind of the EMA. You have to wait a little bit to get that confirmation that it'll keep trending higher. And I'll explain how I use it. So let's say I'm looking around here, right? So EMA is indicating a good, it's already getting out of here. There's about 2 green candles here, this green candle and this green candle above the EMA, right? And so if I look at the MACD, what you look for in the MACD is for this blue line to cross this white line, like over it, right? So from bottom to top. When the blue line crosses from top to bottom, that indicates that the price is most likely going to go down. When it's going from the bottom to top, crossing it over, then you see this green by the breakout signal, right? What I just added right now, the breakout signal. And so I can see right here that it alerts a buy signal, right? Every time it does these little green or these little red, green, obviously it's buy, and then red is to sell. So right here, it was pretty spot on. It caught this loop around here. So if I would have got in here, buy, a nice little 10-cent profit. Again, when you're trading with $1,000, $10,000, whatever, it's just more about how much, when you're day trading at least, it's about how many cents you can get, right? Or about, if you're trading with less money, you're looking more for the dollar range. But in this case, profit is profit. So we're looking for the bottom turquoise line to cross the white line, right? And so I'm just looking here, looking for it to cross. Right here, we see that it crosses, and I'm like, okay, I'm getting a little bit more curious about the price. So I see that it indicates this buy. And so that's basically just how you would use it, right? Obviously, once again, I'm going to be saying this a lot, but don't rely on one sole indicator. You know, don't just rely on the MACD to tell you what to do, right? You have to be your own sort of, you have to use your head too, right? You can't just expect the indicators to do everything for you. There has to be some sort of mental process, a plan that you have to have. So like, if this goes wrong, you know, I'm going to cut my losses right away so that I don't lose that much money. You know, I'm not going to just watch it fall out, right? And so right here, when you're shorting a stock, again, I'll explain that in the terminology video, shorting, buying, whatever. When you're shorting the stock, it indicates here, like you should sell now, right? Or if you're like positive on the stock, like if you're in profit and you feel like it's going to go higher, but then the MACD indicates this and then it starts to trend lower, EMA is already kind of dropping, then it's sort of like take your profits now, right? Because it really won't trend any higher. So we see that it correlates with that. As the MACD begins to fall, the price begins to fall and whatnot. So that is MACD for you. It's pretty simple. EMA and MACD are pretty simple. VWAP is a little bit more complicated, but it does help a lot. It really works well for things like Tesla, the RSI. So if I go ahead and just type in Tesla, it gives me the option Tesla. Let's go ahead and pull up today about midway. So the RSI is, that's an abbreviation. So it's Relative Strength Index. So it tells us like the strength of the stock within that time frame, right? So you see how there's like this highlighted portion that indicates that the stock is turning around. So like it's going from a downward trend to an upward trend again. And we see this sort of V shape here. And then we see it again here. Downward, and then it's reversing. The way that I use this is that when it's reaching right here, it's telling us, if you look at where it says Y right here, it's telling you as you go over it what it is. So right here it's around 31. Typically, if an RSI is below 30, it's indicating that the stock is oversold, right? So a lot more people are selling than, so the price is like, is at a somewhat good deal to buy, right? We're looking for that deal. Again, supply and demand. So you're looking for the best price to get in, best price to get out. And then when an RSI is over 70, that's indicating that it's overbought, right? And so we see this here. When it approaches 70, when it's at around 63, when it approaches 70, right here, so it would be right here, RSI is down here. When it approaches 70, we sort of see that there's not that much demand anymore because the stock is just too expensive. People think it's way too expensive at 70 RSI, so then as it drops down to the 50s in the RSI, and as people see that, okay, well, 50 is not so bad, it's in between 30 and 70 mark, right? It's about in the middle. So, I'll take this chance. So they buy, more people buy, and then as it approaches the 70 RSI again, more people begin to sell. And so we see these consistent fluctuations and increases in price. And the RSI is more of like the psychological study between what people are doing, right? So as more people sell, obviously the price is decreasing, and then as more people buy, as it's being bought more, the price is increasing here. So that could be used to your advantage to sort of identify when it's a good deal or when it's a bad deal. Like when a stock at the price that it is, if it's a bargain or if it's just way too expensive, if it's overpriced, right? So ultimately, what we're looking for is RSI. I typically try to look for an RSI below 40. But the best price would be around below 30 RSI or around 30 RSI, right? Because then that's when you have the biggest potential to hit that 60, 70 RSI level. And then as it hits those 60, 70s, then the price is increasing and you're winning. And yeah, that's RSI for you. And that's basically what I do. That's how I trade the stock market. Obviously this isn't the full scope. This is obviously the mental process behind it that occurs in here, right? But yeah, that's basically the indicators that I use, the ones that have helped me in the past and currently, and the ones that could benefit you if you go ahead and just study up, take action. The first thing that I would recommend is starting on a virtual stock account, right? Like with virtual money, with fake money, so that you're not putting any money at risk when you're starting out, when you're just learning. You really don't want to lose any money if you don't have to. Right? I'm telling you from personal experience. I just started out with not really much experience. I thought that I had a lot of experience. I thought I knew a lot about the stock market. But once you begin to lose money and you don't even know why you lost that money, then you sort of begin to put into perspective. You want to start a study. You want to start to understand why it is that you're losing money, because once you start to understand why you're losing money, then you can try to figure out how to make that money back. And so that's ultimately what I have for you guys. Again, I'll explain how to start trading on a virtual account through your phone. You can do it through your phone, through your computer, it doesn't matter, anywhere with an internet connection. And I'll make another video for that to get you guys prepared for that. So we'll have a lot of informative videos coming for you guys. So I'm excited to do that. All right, thank you very much for watching this video. And I look forward to the next one. Thank you.